Welcome to TheoTRADE. This is Don Kaufman. It's November 22nd, 2024. Just about 40 minutes to go to the cash close here on this Friday afternoon. S&Ps, well, for the most part, massively unchanged. Things are kind of mellowing out maybe a little bit. I got to tell you, though, there was some pretty heavy volatility throughout the course of this trading week. I'm going to show you some really critical aspects of this marketplace right now. And I think it's a couple things that people are just not paying enough attention to. So let's kind of break it down here, of course, on this TheoTRADE weekend update. Critical sector rotations are underway. I'm going to explain that here momentarily. And in addition to it, I'm also going to show you some really specific trade setups. So something I'll often do here on these evening updates and weekend updates is, I'll get into some specific sector rotations. But today we're actually going to talk about details of trades and why I'm actually taking them. So I want to start the weekend update here in the SPX because, once again, look at this. We are on it, people. We are on the upper edge of the expected move. And it's like week in and week out. I'm just telling people, look at this. If you just paid attention, okay, to these expected moves, there's a living that could be made in just the expected moves. I mean, last week on Friday, we hit that lower edge of the expected move butterfly. This week, many of the traders had, upper edge of the expected move butterflies, but there was also a trade setup I talked about from the bell this morning. Just basically buy the marketplace and let it drive us right to the upper edge of the expected move. And if you're listening to this for the very first time and you have no idea what I'm talking about with expected move, look, expected move, okay, is how the options marketplace handicaps forward risk. And this week's expected move, I'm just going to make it rough and dirty. It's about $96. So you're looking for this move of $96, and people, we're like spot on. What's ridiculous about it, and it is ridiculous, is this a line we drew on the screen last Friday, and we're driven literally right to it. I mean, we're on it once again, $96 and change. It doesn't get any cleaner than that for a setup. Now, I'll come back to, of course, expected move in a few minutes, because one of the things that kind of surprised me, I just looked at it like 20 minutes ago while I'm kind of prepping for this video. I'm looking at the expected move, and let's just go for it right now. I'm looking at this. We're 7 days out, okay? But next week, because it's Thanksgiving, you only have a Monday, a Tuesday, a Wednesday, Thursday. Obviously, the market's closed. There's like a half a day on Friday. We still have like a $72 expected move. So what gives? I mean, put on your big boy pants. We're going to trade next week. It doesn't matter what you think. I'm telling you, the volatility says we're still going to trade. And I'm going to show you exactly that. So, all right, let's start to break down what I was talking about with critical, sector rotations. So there's three sectors that I often look at. I'm looking at tech, I'm looking at financials, I'm looking at the energy sector, right? And if you look at these three, well, the financials. Let's start with the financials. That thing just exploded to the upside, didn't it? And I'm not just talking about, post-election. So here's the election, boom. All right, we just drive to the upside. I'm talking about right here. That thing just lifts, right? And it's really right now, the financials, along with a little bit of energy. Okay, energy I would have expected. Energy, look, here's the election, right? Jump to the upside, and energy just keeps trucking right along, which is fine. I'm in a bullish position in energy right now, and I'm looking to get out. I'm kind of getting close to the point where we're going to have a pretty violent pullback in there. So kind of tempting fate a little bit in the energy sector. But the first thing I want to say is, are those two sectors enough to hold the market up? And now I want to go to the QQQ, which is, often thought of as tech. And if you look at the QQQ, the Nasdaq 100, the Nasdaq this week will close at or near the upper edge of its expected move, okay? But there's a problem, and there is a big problem, okay, take a look at individual stocks. The stocks that really right now, just the drivers of the entire marketplace. What are they? It's your Microsoft, it's your Apple, it's your Amazon, it's Google, it's your Meta, your Tesla, Nvidia. I'm not telling you anything you don't know, but take a look at them according to expected move. If we are to look at Microsoft, what did Microsoft do this week? Absolutely nothing. I mean, Microsoft, even with a bid back under it, it's going to end the week massively unchanged. Let's go look at Apple. All right, you got me on Apple. Apple is at the upper edge of its expected move, which I'm going to mention Apple in a few minutes because I put a new trade on an Apple. We look at Amazon. Amazon has had 2 very rough weeks back to back. So we're actually seeing Amazon, okay, crack its expected move last week, okay, on the lower edge of its expected move again this week. Like Amazon, you can even say it's like oversold territory. Then we get to Google, it's abysmal. Google's just getting hammered upon last week. And again, I want to highlight this because make sure everybody's on the same page. Last week, lower edge of the expected move. This week, outside the edge of the expected move. All right, on to Meta. What do we got in Meta? Meta, well, this is kind of a conversation piece. It's nominally higher this week, but not doing much. Tesla, that thing is its own animal lately. I will give you that. Tesla continues to kind of rock in a post-election world. Apparently, it's all Tesla all the time. Last but not least, Nvidia. Nvidia, which we're going to talk about, and is a complete dud, but is unchanged in the week. The rotation right now that we're seeing is big tech, okay? There's no big performance out of it. What we're basically doing is rotating out of some mega market capitalization, basically buy stuff like financials. But then you're going to question well, how is the Nasdaq up? Okay. Crazy enough, you got stuff like Costco exploding to the upside, right? It's Nasdaq stocks. There's a couple of stocks that are exploding to the upside. Stuff like Starbucks pop, okay, to the upside. Huge moves, right? It is market caps that are not that huge that are kind of, again, together driving, if you will, the Nasdaq, but big tech is struggling. And I'm telling you, it's a critical sector rotation going on. And you have to ask yourself, and again, everybody's going to come up with their own answer. You got to ask yourself, you think the financials are enough to actually carry the S&Ps if big tech started to sell off? Right? Because big tech right now is languishing. There's no question about it. But it's largely been masked. And that's why I was saying, I just don't think a lot of people see it. They're not seeing that a couple of these big tech stocks here, as I said, languishing. Obviously Google, but Google's news driven. Okay. But did you realize Amazon? I mean, it's prime time to sell crap right now. Obviously Black Friday, but prime time to sell crap. But obviously they have a cloud business too. This doesn't look good. This doesn't look good at all. In fact, post-election, they're massively unchanged at this point. Okay, Apple can't get out of its own way right now. It's got a bid under it. Yeah, it's at the upper edge of the expected move, but it's nowhere near, okay, where it once was. And Microsoft, this thing is absolutely sloptastic. Okay, you're just not seeing tech being the driving factor right now. That doesn't necessarily discern that the S&Ps are going to go down. You got to watch these tech stocks because any further sell side activity in big tech, and at that point, it is over. I mean, all the Tesla in the world, okay, Tesla plus Costco isn't going to offset, like a $3 trillion company that is, Apple, if it starts to see some sell side activity. And again, the marketplace kind of feels tired right now in many aspects in here, especially when you have something like the financials driving it. By the way, speaking of financials, look at some individual financials out there. Goldman Sachs popping to the upside, but you got to look at like JP Morgan kind of having a little breakout over here. I don't know. I just, a lot of people right now, there's a lot of hubris out there, okay, and a lot of people are very complacent with the S&Ps up 25+%. Okay, I think a lot of people are like, that's it. We're going into December, going into the clubhouse. I'm up 25%. Okay, I'm actually relatively concerned into the end of the year. And I know the statistics, okay, of the Santa Claus rally. And I know the statistics that is close to an 80% chance that the marketplace drives higher towards the end of the year. I know all of that. And I'm still telling you, okay, these rotations, they matter. They really matter right now. And you've got to pay attention because there's other factors underlying. Now, past that, let's get into some sketchy trade. Why am I talking about sketchy trade? Look, today is pretty sloptastic. Today really came down to upper edge of the expected move. I literally called this in the first 5 minutes of the trading session. We're going up. We're going to hit the upper edge of the expected move. We're going to do a little dance. We're going to make a little love. We're going to get down tonight. Day is done. Like that's your trading session. But one of the things I want to point out when I'm talking about sketchy trade, my term for sketchy is, well, this. Forgive me for saying this, but what the hell happened on Thursday that the S&Ps were trading 59.70? Then the S&Ps are trading 59.10. That's 60 S&P handles. We rally back up, sell off, rally back up, take back off to the upside, and finish the day higher. Okay, that does not make me feel warm and fuzzy about the marketplace. This was not just an expansive range. There was heavy volume. We did almost 60 million option contracts. Crap was kind of hitting the fan. And that's the kind of stuff where it's not normal, okay, for a marketplace that just ends the week higher and it goes off into the night quietly, okay? Just be on your game a little bit here. I believe that some of that sketchy trade is because the rate issues have simply not abated. Right? I've been talking about this now for weeks. You have the ZB, which is the 30-year U.S. Treasury bond. It's very close to the low end of the range. We kind of feel like we're just what? It's forming a base over here. And yeah, and if it pokes through to the downside, we're toast. Because the market, it can't take any more, okay, of the interest rate discussion. It's done at that point. And you're hovering in the 10-year just below that 4.5%. So right here is 4.5%. You're one down day in the bonds from popping in the 10-year above 4.5%. Be mindful of it because you're seeing this kind of tech rotation. You got some sketchy trade. The rate, the interest rate issues have not abated. I say NVIDIA is a dud. NVIDIA is seeing some sell side activity, but just the earnings announcement was, relatively dead. We actually popped the upper edge of the expected move, pulled back a little bit. Ironically, NVIDIA will end the week unchanged. But again, its volatility is it's coming in, but not nearly as much as you would have anticipated. So NVIDIA not exactly making anybody feel warm and fuzzy right now. And you've got the entire trading community at this point, okay, wrapped around the idea that, crypto, baby, it's going to save us all. So crypto basically hitting $100,000, and it's a party out there. I look at it a little different. I'm looking at like some of the tech languishing, right? And they're just like lackluster trade inside of tech. And then I look at crypto exploding to the upside. And the two, if you're looking at them and you're like, they're too mutually exclusive. No, okay. I look at those almost interchangeably. So I definitely stress to each and every one of you, kind of be on your game here. The Bitcoin futures to me are, and Bitcoin itself and crypto markets are a sign of excess. And one of the things that I'm looking at extensively is like rotations, okay? And these rotations just, into financials, like look at the Russell as well, okay? I mean, is the Russell really going to save us? Save me, Russell. That thing is exploding to the upside. And the truth is, NVIDIA is worth more than the entire Russell, okay? I mean, every stock in it. Let's be clear about that. All right, start talking about a couple of trades because, again, we're seeing the marketplace. It's lackluster here. As I said, we're upper edge of the expected move. Chicken's done. Talk about some specific trades. One of the things that really has grabbed my attention day in and day out, U.S. dollar. Explosive move to the upside, killing the euro. It's retracted a little bit from the highs today. And again, it's when I say it's retracted from the highs, this thing spiked to 108 and actually pulled back. I mean, it was all kinds of chaos earlier today. I have an interesting trade for you. As the dollar rallies, okay, it just puts pressure into the emerging markets. The emerging markets, maybe, just maybe, okay, this could be some support. How about if we actually do a call ratio back spread, looking for the EEM to pop back to the upside? Yeah, because I got that trade on. Absolutely, I executed into that trade. And I put the trade on, okay, for approximately a 12-cent, okay, credit. So when you're putting a ratio back spread on for a 12-cent credit, if we explode to the upside, it's winner, winner, chicken dinner. But if we continue to fall, I don't lose anything. So it's to me, where the only danger is somewhere right in this neighborhood here, 44, 44 half, okay, could actually cause me a little bit of pain. But for those of you that are on our 3 trades a week, well, you got that trade, all right? We actually shot that trade out today. So I executed into this, pretty extensively today because I like it. I think that, a small reversal inside of the dollar is going to ignite the emerging markets back to the upside. And these things have just been under constant duress. That, or I also like the idea of the EEM is largely exposed to China. China does a little bit of stimulus. China does a stimulus dance, okay, every couple of weeks now. They do the little stimulus dance. We're actually going to pop to the upside in emerging markets as well. I like it. Next trade I actually put on over here. It's another one actually from today. I actually put on a short position in Apple. People, it's not like a long-term short position. I'm just looking for a pullback in Apple. Why? This is actually an in-out spread. Apple's had some chopped out days. It's struggling. But here's the interesting aspect is other tech, as I was showing you a moment ago, okay, is struggling even more. So if we continue to see some of the same rotations, they'll come and they'll actually sell Apple a little bit. Nevertheless, Apple's ranges every day, like this week, look at these ranges. They're almost the range of their entire expected move, like every damn day this week. I love it. And that, by the way, that range that I'm pointing out over here, it's like a $4 range. That's all I need to be profitable. So like, look, I don't, it's not about being bullish or bearish over here. It's about the volatility, and the bearish trade was the right one for me. I just used an in-out spread. One strike in the money, one strike out of the money. Okay, went for it here inside of Apple. So those are 2 new trades that I just executed into today. I had another trade on as well, and this is actually from last Friday. Last Friday, ironically, I had a very similar trade to what I just did in Apple. I had a bearish trade on from last Friday. Bearish. Yeah, I got out. I got out for a 30% gain inside of our criteria on Wednesday. Right there on Wednesday, we dipped just enough. As I was saying, just this kind of like scattered and broken and kind of disconnected trade. Love it. Absolutely love it. But now we actually have Starbucks popping to the upside. You know the irony of that? Well, it could be very opportunistic again for a bearish trade. I'm going to tell you, Starbucks, one of the reasons I put it in here is if it pops to the upper edge of its expected move, okay, early next week, I'm going to actually hop back on board with a bearish trade again in Starbucks. So with all these critical sector rotations underway, there's a lot of opportunity. There's a lot of 2-sided trade. This is the stuff, like, I love it. Like, seriously, love it. I don't, the markets are going higher over here. Let them go higher. It's fine, okay? But, again, you got to kind of be, when I say be on your game, I'm like, look, and stuff like Meta, does that look healthy to you? I mean, like, again, be realistic. You don't have to pull up a bunch of MACDs and a Fibonacci's and the Bollinger Bands, okay? I mean, does that look like, is that a blistering chart to the upside? Probably not. Even Apple, you're like, well, but Apple hasn't done anything. I mean, it hasn't done anything. Year-to-date percentage, it's not even performing as well as the S&Ps. It sucks, okay? Microsoft, what's it doing? Absolutely nothing. All your performance, okay, on the year, some of these stocks are not doing well. Does Amazon make you feel warm and fuzzy inside? I know it's up 31%. Does it make you feel warm and fuzzy? It doesn't, okay? Google, clearly, but Google, you'll be like, well, yeah, but the Department of Justice, yeah, they're coming for Google. I got it, okay? You got to ask yourself, can the S&Ps hold it together to the end of the year, okay, with these stocks pulling back? All right, last but definitely not least, we always cover a little bit about the expected move. Now, I've already covered this to some extent. If you're not paying attention to expected move, missing the big picture. Now, here at TheoTRADE, again, we've spent ample time during my chat sessions specifically on expected move. Every single day, I'm looking at a daily expected move, but this is the weekly expected move. So we're coming off a week. We're coming off a week that had a $96 expected move. And again, I want to make this very, very clear, not only what the expected move was, but where we're going. So expected move, okay, this past week here was plus or minus $96 and change. You can see it right there, right? $96 and change. Awesome. Got it. What are we looking at, okay, for next week? As I said a moment ago, and I already showed you guys this a little bit. So next week, it's interesting to me because it only has 3.5 days. It's only Monday, Tuesday, Wednesday. Markets close on Thursday. We're open a half a day on Friday. And you're still sitting right around. It's not set yet because the market's not closed, right? You're sitting right around like $70. This still seems like quite a bit of volatility, okay? But as I said, kind of be on your game. There's a lot coming out next week in the calendar. FOMC minutes, okay? Durable goods, some GDP. There's plenty, okay, to hit the tape and to feel, again, a little bit more of that, if you will, sketchy volatility. Nevertheless, the one thing I want to leave you with here on this weekend's update, there's a lot of trade opportunities because we're getting two-sided trade. No question about that. Just be on your game coming into next week. Can't stress that enough. I know it's like a holiday week. You got to be looking at the end of the year as, let's not just subside to the fact that we're up some 25% inside of the S&Ps and we're all going into the clubhouse happy, because this is where people get complacent, things get crazy, and you're already seeing critical sector rotations that are underway. Thanks everybody for joining us here at TheoTRADE. Have a wonderful weekend. Bye-bye.